Welcome to another episode of Exploring Prosperity. Today we're looking at one of the most surprising stories in the Bitcoin markets. Over the last 2 years, a wave of public companies have adopted the Bitcoin Treasury strategy of raising Bitcoin per share over time, made famous by MicroStrategy, now called Strategy. But most of these stocks have struggled through the latest bear market. Meanwhile, a small company in France called Capital B has quietly outperformed them all and currently trades at a premium to net asset value of an industry high 1.8 times. I sat down with Alexandre Laizet, the company's co-founder, board member, and director of Bitcoin Strategy, to understand just how they've managed it. I hope you enjoy this episode. Alexandre Laizet, great to see you.
Nice to see you as well, Bob. How are you?
It was a fun conference we were at, and I enjoyed getting to know you there. The Bitcoin Treasury company phenomenon has been one of the most discussed strategies in the markets over the last couple of years. But 2025 and 2026 so far have been a brutal reality check for most of them. Strategy and MetaPlanet, the names that most people know, are trading way below their highs. And meanwhile, a small French company most of my listeners have probably never heard of has quietly outperformed all of them. You're still trading at a premium, and almost nobody else is. I wanted to understand how and why. What's going on?
Well, it depends what is the time horizon that you take, because we've had all-time highs as well, and the company has undergone a bear market too. And actually, if you take the performance of Strategy, the performance of MetaPlanet, and our performance since the launch of the respective Bitcoin Treasury company strategies, all of those companies are up in that respect and outperforming Bitcoin. But yes, over 1 year, Capital B is up 90%, while Bitcoin is down 20%. And that's quite uncommon in the current bear market scenario that we've been into. And quite significantly, Capital B has been the only major Bitcoin treasury company to maintain a premium all during the bear market and to only do capital market operations that have increased Bitcoin per share consistently. So in terms of why, I would say that there are a lot of different elements. Number one is the strength and the organic growth of our shareholder base, because as Strategy and MetaPlanet, we had already started before the craze of 2025. We were actually the third Bitcoin treasury company in the world back in November 2024. And as well, we have a very strong core shareholder base with Adam Back, Fulgur Ventures, UTXO Management, Tobam, a leading French asset manager, and a strong, very strong retail shareholder base that was already there at the beginning and that's been building up over time. And right now, we are sustaining the strongest premium around 1.5 to 2x. Right now, as we speak, 1.8 to 1.9x. And that's also because of the clarity of the strategy of Capital B, which is to replicate the strategy playbook at European scale. And so something I've learned over time is that you can learn things by doing the mistakes on your own, and you can learn from the mistakes of others. And I think that looking at what Strategy has built and everything that they have tried before Bitcoin, and the success of their Bitcoin strategy focused on increasing Bitcoin per share over time and on doing capital market structuring that works, for us has been the best strategy, and we are completely focused on executing it. And our shareholders have peace of mind knowing that that is exactly what we do and what we are going to execute. And so that, and the fact that we've been the leader in the Bitcoin treasury company space over in Europe, and that there is not as much competition as you have in the US as well, and that we've not done any pipe deal. All of our growth, 80 to 90% of the capital raised, we've done it on our own without investment banks. So that's also, I think, been quite an important component.
They must not be very happy with you then.
They have a lot of interest to work with us. So
Michael Saylor has made the U.S. investment banks very happy. You received a really significant praise in one of the sessions that we attended together from one of the more cynical members of the group that was assembled, in that your strategy is a different strategy, in that you're using Bitcoin denominated securities. Explain that, because that may have a lot to do with the perception of the longevity of your company versus others and account for some of the premium. This show is being brought to you by our sponsor, Truflation. Professional investors and economists and probably any casual observers know that government inflation statistics are only an approximation of what real inflation is. Not only that, but the government has a conflict of interest because high inflation can be so damaging to the economy, the deficit, and our $36 trillion in debt. Truflation collects over 80 million pricing data points. Most are updated daily to reveal inflation with precision for asset managers, governments, companies, and the general public. Check them out at truflation.com. We're proud to be sponsored by Foundation. They've created Passport, one of the top-rated Bitcoin hardware wallets, proudly made in the USA. It's fully open source and air-gapped, meaning your Bitcoin stays completely offline and secure. The shocking Bybit exchange hack shows why holding some Bitcoin offline diversifies risk. Now they're launching Passport Prime, your all-in-one solution for not only Bitcoin, but all passwords and 2FA security. Head to foundation.xyz to secure your digital future.
Yeah, well, we've been described as the dark horse of Bitcoin treasury companies because a lot of people back in March last year didn't understand the power and the strength of the structure of our main innovation, which has been the Bitcoin denominated convertible bonds. And they were the first of their kind from a Bitcoin treasury company at the time. And it allowed us to go from 40 Bitcoin on the balance sheet to 620 Bitcoin on the balance sheet. And in one single operation to multiply the number of Bitcoin per share by 7 in one single operation. And we were able to raise with a 50 million market cap, 50 million euros at the time. And how we did this is by having a subscription and a denomination of the debt directly in Bitcoin, a long-term time horizon of 5 years, zero coupon, a conversion price like in traditional markets of 30%. And with this very long-term aligned investors, because their downside is Bitcoin, if the company performs, then we convert the debt into shares, and it is, of course, permanent capital. And if the share doesn't perform over 5 years, we have no leverage because on one side is Bitcoin and on the other side is Bitcoin as well. So it was the best of both worlds for both the investors and the company. For the investors, because their downside is Bitcoin, which is very important in fiat monetary inflation context. And their upside is a call option on a company that can significantly outperform Bitcoin over 5 years. And for the company, it's extremely accretive because you raise convertible debt, but with no short selling, because the investors are already protected by the Bitcoin. They don't need to hedge, and they are Bitcoin maximalists anyway. And on top of that, you delay the time at which you will issue shares. So you have the company growing and having the time to grow after the shares are then issued to the market. And on top of that, our subscribers were Bitcoin maximalists. So even when the stock went to 5 euros from 40 cents and 10 cents, it went to 5 or almost 6 euros. And the shareholders, the major ones, didn't even convert for some of them to take profits. They kept their holdings. And that shows you the strength of the investor base that we have. So that's been a major innovation. And when Strategy has the best product in terms of digital credit for listed markets, we have the best product for digital credit, Bitcoin denominated credit for private markets, because it's the only way to have a 5-year call option on a Bitcoin type exposure with the downside protection of Bitcoin and with no cost, because the investor invests and get the call option for 5 years, but doesn't have to pay additional interest as he would have in a traditional market to pay for a call option. So it's a very interesting product. It was the first of its kind. We produced that in a matter of 3 months at the time, thinking how to get from 40 Bitcoin to 600 plus Bitcoin. And since then, we have issued about 10 of those. And most of them have been either converted or are in the money. So we have today 2,800 Bitcoin more. And we only have like 200 Bitcoin or so that are not yet in the money. But so that's quite a performance for those investors, because when they invested, the share price was 40 cents, and today, after the bear market that we have undergone, the share price is 2x that, is 80 cents. So it's quite a performance given the bear market that we've just had.
The objective of Bitcoin treasury companies is to increase the Bitcoin per share, so that shareholders that own a share are going to know over time that the company will do what it can to increase the number of Bitcoin per share. Is there a structure, is there a necessarily smaller amount of Bitcoin per share that you can purchase over time using Bitcoin denominated securities rather than fiat denominated securities?
No, the limitation over time of how much you can increase Bitcoin per share doesn't depend strictly on whether it is Bitcoin or euro denominated. In fact, it could be easier to increase Bitcoin per share with Bitcoin denominated instruments over time, because if you take the hyper Bitcoinization future, in a world where nobody would accept anything else than Bitcoin, I'm not convinced that this will happen very soon, but if it happens someday, in that scenario, then it would only be possible to do it with a Bitcoin denominated instrument. And in fact, today, it's much faster to do it with a Bitcoin denominated instrument because of the lesser risk that the investor undertakes by investing directly with a Bitcoin denominated instrument. Because if you invest in a convertible bond in euros, your downside is euros. So you have to take the risk of euros or dollars for 5 years, which is almost economic suicide. So then doing that with Bitcoin is much easier for Bitcoin inclined investors than with euros. On the other side, that is for this type of instrument. You could say the reverse if we were talking about preferred stocks. So in the sense of preferred stocks like Stretch from Strategy, it produces more Bitcoin per share if the instrument is denominated in fiat, because the whole point is to have the size of the liability go down over time. On our side, the thing that makes the difference and that doesn't reduce disability and in fact increases is that we have a fixed conversion price in fiat. So as fiat devalues, that fixed conversion price is easier and easier to attain. And so the conversion makes it over time makes it easier to convert over time. So no, there is no more difficulty to produce Bitcoin per share with Bitcoin denominated debt. In fact, I would say that when you look at the numbers of Bitcoin per share increase, we've been in the top companies in terms of increase of Bitcoin per share with our Bitcoin denominated instruments. We have multiplied Bitcoin per share since the start by 42x. So I would say that this was not slow pace.
That's a lot. That's a lot. Yeah, I was kind of thinking that if I am, it's funny because you have to keep thinking binary, but I'm thinking that if Bitcoin were to double, for instance, between now and the time your converts come due, then you're basically paying back that double in fiat. And therefore, Strategy or, in their old converts, if they're paying back in cash or stock, it's a different animal than if it's just Bitcoin, which can appreciate more. But you point out that really you're taking fiat in today and purchasing the Bitcoin, even though you owe the
Yes,
convert
yeah.
in the Bitcoin.
So there is with the same instrument, you could have one scenario where it is more difficult, and one scenario, the one that we've engineered, where it is much better. The case where it would produce less Bitcoin per share is if the amount of shares produced would vary depending on the depth size of Bitcoin. But in our case, we fix the size of the conversion, the number of shares to be issued, at the time of subscription. So it is fixed at that time. So that doesn't change as Bitcoin goes up. And so that makes it perfect for, of course, the company and future investors, because the dilution is fixed at the time, the increase of new shares is fixed at the time of subscription. What varies is the depth to be refunded in case there is no conversion. But if there is a conversion into the shares, which is the great scenario, of course, of performance, then in that case, it is as strong as a fiat investment at the beginning from the investor. Yeah.
Well, let's talk for a minute about the phenomenon of Bitcoin treasury companies that Michael Saylor ushered in a few years ago. And last year, it seemed that there was an elation about the idea that corporations could be buying in mass, and not just regular corporations, which we'll talk about in a minute, but created companies to purchase Bitcoin. And that led everybody to think that there's going to be this unlimited demand, or at least in the near term, and that I think contributed to why Bitcoin rose. And all of a sudden, as markets do, suddenly people started thinking, uh-oh, if this all reverses, then all of these buyers are going to turn into sellers. Explain whether that could happen and if that would ever happen. Is there a risk about the Bitcoin treasury companies that now own 1.156 million Bitcoin? Can they all become sellers?
No. So I think to take a bit of context, there was indeed a thinking 4 years ago that there would be this wave of thousands of companies that would add Bitcoin on the balance sheet. And it has happened in a way because hundreds of companies have put Bitcoin on their balance sheet. And that's great. But what didn't happen is companies in the Magnificent Seven or in the S&P 500, very large ones that would really undertake a strong strategy playbook. And this didn't happen. What happened is a lot of companies that are new or that are young and that decided to take Bitcoin as a strategy and to replicate the strategy playbook in their own region and country. And so that started a phenomena of adoption of Bitcoin on the balance sheet. And yes, some of those companies came in as an opportunistic strategy. And I'm not criticizing, all Bitcoin adoption is good. The thing is that yes, we have seen over the last months 2, 3, 5 companies that have sold Bitcoin after buying it. But 2, 3, 5 companies out of 200 is not really the signal. It's a bit more of a fear that has been materialized, but in a very small portion of the market. And so in terms of the overall market, this scenario of companies selling the Bitcoin is in fact a very small minority of companies. And most of them is not because they wanted to, it's because they were forced to, because of bad debt terms. So that's what we've been advocating for since the beginning, and with Strategy as well, is to have debt terms that are on a long-term time horizon. And in Bitcoin, it's at least 4 to 5 years. And that's been the case of, for example, Sequence, that has had to sell Bitcoin because they had that convertible debt short-term impact in terms of delay. And so you can see that, but that is not a general thing that is applicable to all companies. In fact, you can see that companies are now starting to accumulate again, and that now you are realizing that you don't need the Magnificent Seven or the S&P 500 to adopt Bitcoin in order to have a new bull run. You in fact need a few Bitcoin treasury companies that are organized and that are focused on the same playbook. And in fact, you might even, in terms of market structure, even just Strategy is already buying 6x the number of Bitcoin brought into circulation with mining every day. To give an example, there are 3,000 Bitcoin mined every week, and Strategy is able to buy today between 10 and 20,000 Bitcoin a week.
A month ago, there were 2 weeks where it was over that, and this last week it was almost 20.
Yes.
17.
So the conclusion has been defined in the last Strategy world. The answer to Bitcoin for corporations is stretch. And that was the most powerful slide of Michael, in my view, is that there is such a great product market fit for stretch in comparison with monetary funds that yield 3 to 5% at best, and stretch is yielding 10 to 12% at minimum. And so that's really a big competitor, and you've seen already 3 to 5 major publicly listed companies that have used stretch as part of their treasury, and as well private companies, of course. And that's a momentum that will continue and will accelerate. And stretch, STRC, the monetary fund-like preferred instrument of Strategy, is going to eat the credit markets and is going to, in and of itself, reverse the core market structure of supply and demand in Bitcoin in a way that will blow everyone's mind, because the demand will be so great that it will far exceed the offer in the market, because it's already the case, and we are 8 months after the birth of stretch. So
not enough work is done understanding STRC by evidence of the outstanding amount, which is still about $3.5 billion in a world of money market funds that are 17 trillion. I think that's what it is.
Well, in general, the money the size of money in the world is 100 trillion. Then you can, of course, put it lower and have it at more of the comparable monetary funds and so on. But it's in the multi-trillions dollars, and it's in today's dollars. So
it's kind of funny. I think of Strategy as something of a vacuum cleaner of fiat, where it takes it in $100, buys Bitcoin, so $100 goes into the market from somebody who wanted to give up their Bitcoin, and the Bitcoin just keeps growing, and they just keep this vacuum cleaner working, and instead of collecting dust, it's collecting Bitcoin. And so for a Bitcoin enthusiast, if you look at it that way, it becomes pretty compelling.
Yes, and at the same time, it is the case, and it is as well the case that it produces a lot of performance for the investors of that product as well, because 10+% completely removes the need to have any interest in ETF indices and all sorts of asset management firms that propose to just do the performance of the S&P, which is about 10 to 15%, which is exactly the performance of Stretch, which is backed by Bitcoin. It's much less risk and much more stable performance. And over time, it will eat as well those markets, not only the monetary markets, but the private debt markets and even a lot of individual investors that have assets in traditional S&P indices and so on. They will just transform that into Stretch. And so it's really impressive. The market is literally infinite because
Yeah, he's calling it digital credit. It's not just that you have an extraordinary dividend of currently 11.5% on STRC, but you also get tax treatment as a return of capital. And most importantly, he emphasizes the liquidity is extraordinary. And you generally can't find securities that pay anything close to 10% that also have extraordinary liquidity. Let's talk a little bit about adoption. You came to Capital B from Accenture and other jobs where you wound up, I'll say, socializing the idea of treasurers and chief financial officers of corporations to pay attention to their treasury strategy. Tell us about your experience there and how it led you to Capital B.
You know, in 2020, during COVID, I realized I had no freedom left and that I would start to put an end to that process and find a solution. And I found one, it's called Bitcoin. And I decided to dedicate my life to working for Bitcoin and to working for the adoption of Bitcoin. And since then, every decision I've made has been to contribute the best to Bitcoin adoption in the world. And so at the time I was economist at EY, a big four audit firm, and I was advising the largest publicly traded companies, corporations, treasurers in France on their international intragroup transactions and cash management. And then after that, digital assets lead at Accenture in France, I advised 30 plus financial institutions. With these experiences, I've been bringing Bitcoin at the center of the discussion, first with corporations and then with the banks. And I'm happy to see that there has been already some fruits to that. You've seen maybe that in France, already 3 systemic banks have now announced that they have launched some type of Bitcoin offering. So Bitcoin custody, Bitcoin trading, Bitcoin access overall. And that you have now the largest energy company in France that's partnered with Mara, the Bitcoin miner, to start to do Bitcoin mining in France and in Latin America. And so you see that this is moving, and I'm glad that I participated to some extent to these education processes, at least within those big institutions. And the movement has been very noticeable since the launch of the ETFs from BlackRock. You know, I was advocating for Bitcoin in the dark, and then BlackRock came out and everybody wanted to talk to me about how to do it instead of just whether to do it or not. And you know, from the European perspective, something that's typically different is people look at the technology as whether it is good or bad. Whether the US, you look at how to make profit out of something, if it works or not. And so since 2024, some banks have decided that they didn't know whether it was working or not, because they didn't still take the time to learn sufficiently about it. But they knew that since BlackRock adopted it, it would be far worse for them, for a reputation perspective, to not do anything than to start doing something. And so the whole thing has shifted upside down, and now everybody is working on some kind of Bitcoin offering. And after dedicating all of my time to Bitcoin institutional adoption within those firms and with those banks, I have joined the board of Capital B to launch Europe's first Bitcoin Treasury company, because I wanted not only to advise but to actually execute and implement and create Bitcoin capital markets over in Europe. And that's my mission. It's to bring forward Bitcoin institutional and retail adoption over Europe and as well through the world, with Capital B as the most laser eyes focused company on increasing Bitcoin per share over time. And that's my sole focus for every day, is to increase Bitcoin per share in everything that we do. And it's really, in my view, it's really a dream that we have and that we live in now, to have a lot of Bitcoin maximalists in the capital markets, bringing Bitcoin forward. And more and more, and that's been the case at Strategy World this year, you realize how much more Bitcoiners you have at the various financial institutions and regulators and law firms and everywhere. And it's just very much accelerating.
So I read recently that the number of people on the planet that have touched Bitcoin is something like 5%. That feels ballpark right. But it also feels ballpark right that that number hasn't changed very much if you look at retail over the last 2 years. And I am wondering what you think that number is with corporations, because it feels like the number of corporations, it's still very low, but it seems to be a much more accepted financial instrument more rapidly with institutions that certainly have deeper pockets. Having been in touch with so many institutions, what's your view of the adoption percent?
Well, my view is that it has increased significantly, of course, last year in terms of the corporations, and that's been quite noticeable. It's not a given that this will just double and double and double exponentially over time. It is for sure that you see more and more companies adding Bitcoin on the balance sheet. My view is that there will be an acceleration and a strengthening of the institutions and the corporations that already have started to accumulate, and that even the ones that want to start, they will start to buy the companies that have started to accumulate rather than typically to start their own. And I anticipate a lot of adoption coming from institutions and retail behind institutions and retail directly, buying securities exposed to and contributing to Bitcoin adoption. And so in my view, the Bitcoin adoption will be far increased through the securities and the securitization amplification of Bitcoin. And typically, I would say, through the most trusted companies in the space. So Strategy, of course, in the US, Strive has made a great advancement as well in the US, MetaPlanet in Asia, Smarter Web in the UK. We are positioning for this over in Europe. And so our view is that through the products that those companies will issue and through the equity, of course, of those companies, then the adoption will significantly increase in that way. In terms of individual adoption, the numbers are quite high, actually. When I was working with the banks, 70% of the cohort between 25, 35 years old had already bought or wanted to get exposure to Bitcoin.
Well, in what area? What geography?
In France. Yeah.
That's
So
amazing. Yeah, that's very high.
So yeah, and so for the banks, it started to be really a lot of risk to not do anything.
Yeah, it's hard to answer the question. I don't know when one of your customers or counterparty says, "What do you make of Bitcoin?" When BlackRock launches an ETF that's the most successful ETF in the history of man, it's hard to say, "Oh, geez, I haven't really spent any time on that."
Yeah, well, that's correct. And however, you need to distinguish between the number of people that adopt the asset, the percentage of that, and the portfolio that they have. In my view, even if the adoption of the younger generations is very high and it's growing fast, in terms of size, you will need a few more years to see increasing size, I think, in that respect, because 80%, it's like the 20-80 rule, 80% of the wealth is in 20% of the hands, or even less, maybe 2% or 0.2%. So it's really those traditional investors that are not yet allocated to Bitcoin at all, because there is less Bitcoin than millionaires in the world. There are 21 million Bitcoin, 100 million millionaires. And so this means that nobody owns Bitcoin today almost. It's just a non-existent exposure so far. It is already taking a lot of size because of high net worth individuals that have been positioning very strongly in the space, and corporations and hedge funds and so on. But the fact of the matter is that Bitcoin should be today around $1 million a Bitcoin, around the market cap of gold. And it's not. So it means that people are completely underexposed to it. And they are a bit conflicted because a lot of the portfolios are constructed of assets that have a lower performance. And so the mere idea of adding more Bitcoin, you have to turn your view of economics a bit upside down as well. So, we say, yes, you can allocate 4% of the portfolio, and that will be the case, and that will increase over time. But the gates are not yet open. You think that they are open, but they are not yet open. I was speaking with a large systemic bank like just before our podcast, and their whole private bank is not yet open to Bitcoin. The gates are not yet open. And we think like this is done, this is already accessible. It's not. And if it is accessible in some aspects in the US, at least in Europe, it's not even close to be started. And I think that in the next 4 years, people completely underestimate the flows that we will see into Bitcoin, because the banks are just starting now to at least offer some access, but without marketing. And so they are just starting marketing in the US, and it's been 2 years. I think in 5 years, the levels of adoption will be far greater, and we will be much closer to $1 million a Bitcoin than what we are today. And so if you take that into perspective, Strategy is extremely successful today, and it's been 6 years since they started their strategy. And we've had already a great start after 1 year and a half. And I'm very bullish for the next 4 to 5 years, knowing that Bitcoin is not even yet accessible in France and in Europe. So
I should have probably checked these numbers. I was at a conference in April of 2025 where they announced that there were 79 public companies around the world that own Bitcoin. And I think I just saw a number in the 200 to 250 range. Do you know what that is offhand?
That's correct. Yeah.
Yeah. And these are companies, as you pointed out, that generally have large treasuries. Even if they're a private company, they can still have, and I'm only talking about public companies, But generally speaking, these are companies that are generating cash flow and needing to do something with their treasury, with their cash operations. And so we're still in the early, both the spread of adoption in numbers of companies as well as the increase in wallet share per company. And so, and you were just referring to private banks with individuals who have not been allowed to purchase on the systems. Both of these markets are so gigantic.
Yes, and you can see that in a lot of ways, and that's why there is still a huge advantage of having the possibility to buy a Bitcoin treasury company for many investors in many countries in the world where you don't have that direct Bitcoin access, or a lot of 99% of investors prefer the Bitcoin keys to be held by the bank or by the company that is holding the Bitcoin with banks. The importance is that self-custody is a possibility for, of course, Bitcoiners, but 99% of investors prefer that to be sitting within the traditional investment portfolios and within securities accounts, and being able to use that to increase the capacity to buy a home and to get a loan and to get credit and not have to sell the asset. And that is the reason for why a lot of Bitcoin treasury companies in their respective regions and strategy globally provide a very strong value proposition to investors for this and for the Bitcoin per share increase over time, of course. And so it's indirectly the capacity to access a strategy that is not available to all individuals, the ability to take on perpetual debt for which you just have to pay the interest every year, like Strategy is doing right now. This is not open to individuals generally. So that ability, you can take advantage of this by just buying the Bitcoin treasury company. And so it's really, on top of that, contributing to Bitcoin adoption, and you add more Bitcoin purchasing pressure on the market. And so it's just a positive network effect overall for the Bitcoin ecosystem. So, yeah.
What are the things that you worry about for your company or you worry about for Bitcoin treasury companies in general?
The main risks are around, in fact, the custody of the Bitcoin, because at least the companies like Strategy and us, we cold storage the Bitcoin with banks, and we don't play around with Bitcoin. Our strategy is Bitcoin maximalist, buy and hold. And so the main risks are around the security of the custody of the Bitcoin. And both Strategy and us only work with regulated custodians. On our side, only banks regulated over in Europe and Switzerland. And in our view, that is the best way forward for a publicly listed company. Nobody wants the management to walk around with the keys. The custody is a job in and of itself. Improvements in terms of security and processes is a full-time job. And we have selected very carefully our partners in this. I've used my experience because I was working with the banks before to set up those Bitcoin custody infrastructures. And so I've only selected the banks that were using the technology that I had found to be the gold standard in the industry. So that's the case as well for Strategy. They have mentioned sometimes the type of custodians they use, and it's only tier 1 regulated custodians in the US with the likes of Fidelity and Coinbase and so on. So At the same time, in terms of risks for Bitcoin, a lot of trust is placed on certain custodians as well. So that is something that needs to be carefully monitored. And that's a question of the auditors, of the regulators, and that starts to be quite important when 8 or 9 out of 10 ETFs are custodied by Coinbase. That's quite, of course, important. And at the same time, they have been extremely successful and have the strongest track record, together with Fidelity as well and the likes in the US. And they are serious organizations. They are publicly listed, and they have a very strong audits, and everyone is looking at what they do. Nobody wants to go to prison. I think that that risk exists, but actually it's quite low, but needs to be monitored. And the other risk is some companies that would lack transparency and add too much leverage to the strategy without being transparent to their shareholders. And so, we've been asked, Capital B, will you use some of your Bitcoin to do yield strategies and this kind of things? And we've never done that. And we have the option. We could, of course, we are an operational company. But if we were to do something, we would be very transparent with the market like MetaPlanet did. They said, when you raise capital, this is the type of amount that will be allocated to a Bitcoin income generation strategy. And that is how we will do it. And this is the segregated amount that we allocate to that, and so on. So I think transparency and consistency are the most important things. And in terms of share price, in terms of company overall, in my view, a lot of risk is coming from leaders that want to always do new things and have new ideas and want to constantly go onto the new shiny thing. Our perspective has always been to adopt the strategy playbook and deploy it at European scale and be laser eyes focused on digital credit and increase Bitcoin per share and have that long-term Bitcoin maximalist principle of buying and holding Bitcoin forever. That's our playbook, and I think a lot of value in capital markets is in the simplicity and the clarity of the strategy of a company.
Yeah, that's true. I've been in the markets my whole life as well, so that's exactly right. If your MNAV were to go negative, then that would also slow down your ability to increase your Bitcoin per share. But it wouldn't go negative. It would just, the Bitcoin per share would probably not go negative unless you were issuing stock at a discount, which you wouldn't want to do, right?
Yeah, exactly. So in fact, if the share price goes below the equivalent of MNAV1, so if the premium is non-premium but a discount, it is indeed true that if you issue shares at that time to buy Bitcoin, then you will not increase Bitcoin per share, you will reduce Bitcoin per share. So the whole capacity of a Bitcoin treasury company to increase Bitcoin per share in such a scenario comes from two main type of activities, either from operations that can provide more cash flows and increase Bitcoin on the balance sheet with no issuance of present or future shares, or innovation on the digital credit side, meaning Bitcoin backed or Bitcoin denominated credit. And in fact, that is what has differentiated us since the beginning, because we have raised...
Even though you haven't traded at a discount.
Well, yes, but that's as well because we've been the company that has issued the most credit, Bitcoin-backed credit, as a percentage of our market cap in the ecosystem. because of the facility provided by the Bitcoin denomination.
Yes.
You have no leverage, so you can actually have more amplification with zero fiat leverage, and that capacity has also constituted a form of floor to date in the premium. You know, when the premium has fallen around 30%, and the market knows that at any time we can issue a Bitcoin denominated convertible note with 30% premium, then you don't want to bet against Bitcoin maximalists having the capacity to increase Bitcoin per share from one day to another with one single operation. One sweet spot that we are in as well is that we have that capacity to one day from another double the size of the market cap in one single operation with those types of issuances of Bitcoin denominated instruments. But that's one type of instrument. We are also working on other types of products that could also provide more possibility for the company to increase Bitcoin per share, irrespective of what are the market conditions at the time of the issuance of those products. And I think that will as well increase significantly the prospects for the company. And over time, I'm quite convinced that the types of premiums that we will see will be more comparable to the ones of traditional public markets. But there needs to be more innovation from the side of Bitcoin treasury companies and more track record in the credit instruments, of course. And over time, as Strategy is accumulating a lot of Bitcoin with Stretch, and if Capital B continues as well to consolidate its leadership in digital credit over in Europe, then the premiums, in my view, will go higher over time, as we are treated as normal companies able to increase value per share. And it's not because it's Bitcoin that it shouldn't be treated as well. In fact, it should be treated better. When you look at the traditional premiums in the market, like 10x, 20x, just on cash flow expectation and no balance sheet, I think that will be over time reversed. But there needs to be more execution on the Bitcoin treasury company side as well. And we are committed to that in Europe.
It's true over time, if you show consistency of any metrics that you're focused on, the capital markets tend to reward you. So if your Bitcoin per share were to rise consistently over time, then you would expect that premium to be maintained and grow over time. Michael Saylor's been asked about how low Bitcoin would need to go before his financial strategies would have to adjust. And he's talked about 80 to 90% drawdowns. It strikes me that in your business model with Bitcoin denominated securities, you have a lot more flexibility than Michael Saylor does with Strategy.
Well, I would not say that because in fact, Strategy has a much larger balance sheet and a lot of options in public market in the US. So it would be too much to say that we have more options. But if Bitcoin were to go to zero, let's talk extremes, our debts related to the Bitcoin treasury company strategies are only denominated in Bitcoin. So our liabilities would be...
What I was really asking, he was talking about adjusting his financial strategy, right? He wouldn't need to adjust. He wouldn't need to, for instance, stop dividend payments, which he has the option to do on certain of his preferred
Yeah,
stock.
exactly.
I just mean that you would have greater flexibility before you needed to take adjustments to your financial strategy. Is that?
Well, that's correct in the sense that we have no interest payments for our Bitcoin treasury company strategy. So that means that whatever the Bitcoin price, we have no interests payment to pay to investors, and we don't need to do a capital market operation to pay those interests. At the same time, it is a traditional company, and if Bitcoin goes to 10,000, it is for sure that we will not be able to raise as much capital as we would have wanted to, but we would not have to pay interests that would be quite significant compared with the value of the Bitcoin at that time.
Right, it's in fiat, right?
Exactly.
And, as well, on the way down, your Bitcoin, the growth in your Bitcoin per share theoretically would not need to be adjusted, would not need to change, because you could, if there's still liquidity in the market at various prices of Bitcoin, then
there could be some impact, but it would be
undoubtedly there would be in reality.
But it would be minimal, because we would, if Bitcoin were to go to really a very low level and the share would not reach the levels of the conversion after 5 years, so it needs to be for 5 years as well, because if not, it doesn't impact at all. But if it goes for 5 years and there is no conversion, then yes, you have to give back Bitcoin, but you withdraw potential dilution as well. So the fully diluted share count would go down dramatically as well. And so in terms of Bitcoin per share, it is much more protective than fiat liabilities in the downside. And in the upside, that's the great thing we discussed, it's the same, because the liability is in Bitcoin, but the conversion and the issuance of shares doesn't move. So I would say that it would be an equivalent pure play with Strategy, but an early stage pure play. So, there is a bit more risk because it's more early stage, and Strategy is much bigger, of course. But there is, at least, of course, on the other side, a bit more upside potential because it's more early stage. Our path is to implement the Strategy playbook, and over time to issue potentially those types of listed digital credit instruments, of course, over in Europe. It's just that we have this unique opportunity, because we are in this early stage growth period, to do capital markets operation that can be really transformative and provide growth opportunities for our shareholders that are quite similar to the ones that they had in Strategy back in 2020. So that is the exact place that we are sitting in right now. And in fact, we are not sitting on it, we are running towards those objectives, but with a clear focus and strong foundations, because time works for us. We have the Bitcoin on the balance sheet, and what needs to be done is to execute properly the playbook, not try to reinvent the wheel.
Alexandre, for anybody that is in a corporation that is in the business of purchasing Bitcoin, it's incumbent upon you all to understand what these quantum risks are that I believe has weighed heavily on the price of Bitcoin. Is this a risk that is warranted to be taking some of this high price out of Bitcoin? How do you assess this quantum risk?
What I've analyzed for this cycle's quantum risk, because it comes back often, I don't want to minimize it. I think that it's a fair question to which we will need to have great answers that are not completely there yet. At the same time, what I've noticed is that the main voices of the quantum risk, at least on X, have been voices that have a conflict of interest in terms of their investment in quantum companies that they are promoting at the same time. And I am directly thinking of Nick Carter, that I respect very much as well as a long-term Bitcoin investor and voice and as a person. But on that topic specifically, I've found that, and he has mentioned as well that he has that conflict of interest. He has mentioned that for reference and so on.
Yeah, even if he has a conflict, he certainly was writing from the heart, as he usually does. And
Yeah,
it's just a question of opinion. And he painted a very interesting scenario. And the first essay he put out, he said that I'm not selling my Bitcoin yet. I'm just
exactly.
explaining what the risk is.
Yeah, but still,
But I do
I
think
see that
his essays had a lot to do with the weakness in the price.
possibly, but I would say that that aspect I think should be taken seriously of the interests that are related to the amplification of that quantum question. At the same time, you have as well the truth that there is a risk of quantum being able to affect cryptographic networks over time. And I think that the solution over time will be to have some kind of upgrade, but the solutions that are floating around in terms of freezing assets and so on are not satisfactory in my view. So I guess that there will be some kind of optionality provided by an update of the protocol over time for some addresses that are more vulnerable than others. And I think that will be resolved much faster in Bitcoin than in the rest of the cryptographic ecosystems. So in my view, the risk is really materialized after maybe 10 to 15 years in terms of the first potential applications, because the quantum research firms say that it is within 10 years, and the Bitcoin maximalists say that it is not before 20 years. So let's take the 10 years, okay? And I think that, there have been a lot of upgrades in Bitcoin for the last 16 years, 17 years, and that there will be new ones over the next 16 years, and that this will get resolved much faster than anything else. And
There was a
if
there was a
anything happens, in my view, it will strengthen the Bitcoin mining capacity, because the most probable outcome, in my view, is that some quantum computer is used to do more aggressive and more efficient Bitcoin mining, at least to take more market share for that miner that discovers that capacity. And so I don't see that as a risk that would be substantial to Bitcoin. And that's why I'm saying, yes, it matters to speak about the issue. And I think that the post of Nick is both useful in the sense that it poses a question that a lot of people have, and that is a question that needs to be respected and answered to. And at the same time, I've noticed ways of amplifying the issue that are not really matching with the reality of the risk. And as well, I've seen a lot more impact of the geopolitical risks and the wars anticipation by the market on Bitcoin than quantum itself. But I would say that yes, it is true that this is a question that large institutions ask, and that sometimes can slow down for at least 1 year some processes within large institutions. I've had lunch with the president of a large bank in France a few months ago, and he asked me like 5 questions, and this was one of them. And the answer was satisfactory to him in terms of, the relativity of that risk and the comparison. Because every time that we talk about a risk, you need to talk about a risk in terms of the relativity of that risk compared with the overall systems and the comparison of that risk with other risks. So yes, there are thousands of risks in the world, thousands. And at the same time, you need to work with risks, and you need to evaluate those risks, and you need to account for those risks. And so for a bank, for example, they need to assess that risk and say that this risk is 0.01%. Okay. And does that affect the viability of Bitcoin as a long-term store of value? No. It affects maybe the size of the investment. Maybe instead of investing 99%, they will invest 98%.
Yeah, many institutions will take the bear case and they'll have a zero for Bitcoin, and that probability went up a little bit with all of the attention that Bitcoin got, especially for institutions.
But in my view, the bigger risk, and for financial institutions and for investors, is not quantum, is some proposals that want to rush into an upgrade of the protocol because they see that risk and they want to be the one that has solved the problem and that has upgraded the protocol. And they want to reminded in history as the person that proposed that Bitcoin improvement proposal. And that is my view, is the greater risk. And the mere fact that we have not reached a consensus right now also means that the problem is not that strong yet as a consensus for the market. Because if it was a consensus that this was a critical risk, a lot more people would be working on it and a lot more people would be putting much more attention to the actual solution that we have. But it's great to see that there are already proposals, there are already research being done. The Blockstream team, in my view, is great and is doing fantastic work for 10 years. And I'm confident that we will find a solution in the next 3 to 5 years that will be not perfect, but that will minimize the risk in a way that is close to inexistent.
ARK Asset just published a research report on their website in conjunction with Unchained that was a succinct and good report that kind of laid out. We'll have plenty of warning because the progress of quantum will be in a step function and the world will be watching as much of this unfolds, and they probably with plenty of time will be able to get the urgency to fix something.
Yeah, it will come over time. It's good to see that there is at least a debate. The question has been brought to the public, and there are talks about it and solution being brought to the market. This will get resolved. You know, when I started back 4 years ago, not much banks were providing services for Bitcoiners. In fact, maybe 3 or 5 in the world, and they were not the systemic banks. And now it's tens of them, and it's growing. And as it grows, Bitcoiners will be more and more powerful and have more and more freedom. And I think that's a wonderful side effect of the Bitcoin Treasury programs, let's say, organizations.
Well, Alexandre, it's great to see you again. Thank you so much. This has been a fascinating conversation. I hope the audience has learned a few things about your industry. Thank you again.
Yeah, Bob. Nice to meet you again, and looking forward to seeing that live and to the next one. And thank you to all the listeners.
I believe the next generation can live better than any before it, but only if we stay curious, keep learning, and refuse to accept decline as inevitable. If that message resonates with you, please hit subscribe and share this video with someone who's curious as well. And if you'd like to go deeper, you'll find essays and research on my Substack. The link is below. Until next time, keep exploring.